Hello, everyone, and you're all very welcome to our webinar, The Role and Potential Economic Impact of Cooperatives in Africa. My name is Malachy Mitchell. I'm the Managing Director of Farley & Mitchell. And on the panel today, this is a question and answer format. We're delighted to have a number of speakers who have a lot to say in relation to this particular important topic. So first of all, let me introduce Stephen Ahwa. Stephen is a colleague and Regional Director of Farley Mitchell's Ghana SSA office. Stephen is a seasoned food and agribusiness professional, having consulted widely in Ghana, West Africa and across SSA. He has a lot of experience both at primary production level, crops and livestock, and indeed at processing or downstream activities within the food and agricultural value chain. Prior to joining Farley & Mitchell, Stephen worked as an independent agri-food consultant in a variety of organizations, including the FAO, USAID, and African Development Bank. We're also delighted to have with us Dr. Lucy Quinu, and Lucy is also an agribusiness specialist with over 18 years of experience in agricultural value chains and the development sector. She's currently a member of the advisory board of the African Council for Organic and Sustainable Agriculture, as well as the West African Chamber of Agribusiness and the Chamber of Agribusiness in Ghana. Lucy holds a number of different academic qualifications, including an MBA, an MA, and also a Doctor of Public Administration and Business Administration. She's also a member of the FAO's Global Forum for Nutrition and Food Security and contributes to the global dialogue on topical issues under this theme, and is also a leading member of the Ecosystem-Based Adaptation for Food Security Assembly Ghana, a UNEP voluntary organization. Finally, then we have Akshar Sharma. Akshar is a senior FMCG professional with over 25 years experience in the food and agri sector. He has worked across various international markets, including Ghana, which he now resides most of his time, Turkey, Iran, UAE, and Singapore. Akshar is also chairperson and commercial director of Shinkafa Buni Rice Farmers Association, which is based in the north of Ghana, an association supporting farmers to scale up their rice production in the northern region of Ghana by providing inputs, technical knowledge, mechanization services, and access to market for their produce. Akshar is also a co-founder and director of Salmak Agribusiness with his partner Samuel Sarpong, a company with 25,000 acres located in the northern region of Ghana and headquartered in Tamale, where he's speaking to us today from. So thanks again to all our panel for being with us. And just to say to you, the participants or the attendees, I should say, here today, please, if you have any questions, we'll deal with them at the end of our session, and just send them to us through the Q&A box, and we can pick them up and deal with them then. So let me just kick off then, and perhaps, Stephen, you might kind of set the scene for us in relation to cooperatives in Africa. We know in the concept of mutual society, in other words, equal ownership, co-ownership between farmers is something that is in existence and has started off actually in Ireland by an Irishman, and has been very effective mechanism and model for particularly the dairy sector, but also many other food and agricultural sectors in Europe and indeed in Asia and America, but in Africa, perhaps less so, and that's what we want to shine a light on today. So maybe you might just set the scene for us on cooperatives and the current status in Africa.
Right. Thank you, Malachy, and good morning to our listeners and participants on the program. Right. Cooperative is basically collective action, group, people of various backgrounds, especially agricultural cooperatives, agricultural SMEs, who decided to come together, to drive a common purpose and be driven by a common goal. And cooperatives create social relations that enable individuals to achieve goals that they may not otherwise be able to achieve by themselves. For instance, cooperatives can help farmers benefit from economies of scale by lowering their cost of production, for instance, in terms of acquiring inputs or hiring services such as storage and transport. Agricultural cooperatives also enable farmers to improve product and service quality and reduce their risk. Right. So when you come into Africa, cooperative is such a big thing, but unfortunately, with respect to the enormous benefits that cooperative societies tend to render to farmers and smallholder institutions, you could see not too many good-natured cooperatives exist, in Africa to drive the goals and objectives of farmers who come together to form the cooperative. And there are very few cooperative societies that are working well. For instance, in Ghana, the cocoa sector is well managed by the government. And for that matter, farmers who work within the cocoa value chain are able to form very strong and solid cooperative societies because they are well managed, well regulated by the government and with some structures that are put in place. So as I speak, over 1,342 cooperatives have been identified in the Ghana cocoa sector. And out of this number, it's only about 512 that have been registered with the government's Department of Cooperatives. So this tells that there is enormous room for cooperatives to be able to register and then be able to render the services that would inure to the benefits of their members. Let me be quick to add that cooperatives tend to become stronger, or in instances in countries where cooperatives are stronger, for instance, East Africa, stronger cooperatives are able to attract, financial investments with ease. There is this tendency of ease of access to farm inputs. Because they are organized, they're able to access several kinds of services, that inure to the benefit, to their benefit and enhance their productivity as well. And because they are together and very cohesive, they are able to negotiate for their produce, in identified markets. So putting all this together, cooperative societies that are very strong, are what Africa really needs. And in places where we have cooperatives, but then they tend not to be strong, I think it's incumbent upon the governments as well as the key stakeholders to assist those cooperatives to overcome their challenges and become strong so they can be able to benefit from the economies of scale and then the other benefits that are associated with coming together as cooperative society. That is what I can say now.
Yeah, thanks, Stephen, for that. And just kind of listen to what Stephen has to say there, actually, in terms of you've kind of been working on this from the ground up as chairperson of Shinkafa Buni Rice Farmers Association. So could you tell us maybe a little bit how that came about and looking at it from very much a commercial perspective on the ground and the various challenges you had, but why was it an idea and why did that come about to actually form this cooperative?
Yeah, thank you so much. Good morning, everyone. I think Stephen has covered quite a bit on the cooperatives and what they exactly do. In Ghana, I've been in Ghana since 2015. I came in 2015 and joined one of the rice milling unit called Avnash Industries. I was heading the business for them. And the need arose because there is a lack of raw material. And when we see that you have set up and you have invested such a large capital to put up a milling unit with 500 tons of capacity on a daily basis, which requires almost 180,000 tons of raw material on an annual basis, that was a major challenge for the company and the factory to run optimized way of functioning. And from there, we also saw in the existence, there was in the maize sector, there was a cooperative running by the name called Mazara and Arziki. And they were quite successful in that area. And seeing that model, Avnash also decided upon setting up of an association. So we came up with Shinkapha Buni Rice Farmer Association with the key objectives is first to generate the supply chain to feed the rice mill. That was the one. And then to also promote the farmers in improving their yields of paddy, because the yields were very, very low as compared to the international levels on per acre basis. So the cooperative was also responsible for increasing the yield with the farmers and sharing the technical knowledge with them, giving them access to inputs, which was one of the major challenge for the farmers to actually access, because all these smallholder farmers, they are not that literate and educated that they can approach the banks and they are easily able to get the loans which they need. And they, unfortunately, the rate of interest also is so high in Ghana as compared to other countries that it doesn't make it viable for a farmer to actually borrow the money and then do farming over there.
Yeah.
So the key objective for Shinkapha Buni was to actually step in and support the farmers in this rice value chain.
Okay, thanks, Aksha. And looking at it then, maybe Lucy, from the perspective, because I know you had some involvement and you worked with Action in relation to the establishment of Shinkapha Buni rice farmers. What, from your perspective, were the challenges that and perhaps also with other cooperatives establishing these structures?
Thank you very much. Good morning, everybody. I think the main problem is resources, and in particular, financial resources. Both ways, resources to be able to develop the cooperative to a stage whereby governing and business management practices and thematic areas within the development sector can be executed or can be implemented properly so that the cooperative is sustainable. And this goes in two ways: from the regulators, that is the Department of Cooperatives, to help the cooperative stand on its own, and the cooperative itself having enough resources to hire consultants to help them improve their functions and sustainability. So that is one key area: resources, and in particular, I'm referring to financial resources. But all through this is something we can look into as an opportunity if we want to develop cooperatives further. It can be an opportunity in the development sector where government and other key stakeholders can see cooperatives as a key tool in development so that they pump resources in sustainable business management practices and sustainable regulation of cooperatives to be able to develop themselves and achieve their goals as cooperatives.
Thanks, Lucy. Just also to mention, some people are still joining us, that if you have any questions, please pop them into the Q&A box and we'll pick them up later on. So Stephen, kind of back to you. Lucy's mentioned resources being a key issue, and in particular resources meaning finance, access to capital and finance for the establishment of co-ops. From your perspective, being involved with cooperatives and perhaps even being involved in the establishment of them, what do you see as being the key set of challenges?
Right, thank you so much, Malaki. Yes, it is true. Resources are key requirements of cooperatives. Cooperatives need investments, to procure farm inputs, to prepare their fields, and then engage labor to produce, in terms of primary production. Then when it gets into processing, money is required, packaging, and then distribution of their produce to identified markets. Yeah. So investment is key, but then the challenge that I have identified is the fact that the financial requirements, that would enable cooperatives to access investments is usually beyond their reach. in terms of collateral availability, in terms of some other guarantees that they need to provide to secure a facility from a bank or microfinance institution or an investment firm, is usually lacking. So most of the time, that challenge exists. But then there has been instances where well-organized cooperatives, are able to weather the storm to overcome this challenge because of the group coherence and then the governance structures that they have in place. So a lot of some financial institutions, could ride on the back of the group guarantee mechanism of cooperatives to advance facilities to the cooperatives. So in such an arrangement, there is always that kind of a tripartite arrangement with an off-taker on one side, the cooperative society who are producers, on the other side, and then the financial institution, interplaying with input service providers, also on one side. So an arrangement is made, and then between the bank and then the input and service providers. The bank advances a credit to the service providers. The service providers go in to provide the needed services to the farmers to produce. And once the farmers are able to produce and the products are harvested, the off-taker is available to off-take the produce from the farmers. And here the off-taker would go and then wouldn't pay the farmers directly, but based on the tripartite arrangement that has been made, contracts signed, agreements made and all that, the off-taker pays the farmer group or the cooperative society to the bank. That initially advanced some credit to the service providers and then the input service providers as well. Yeah. So once that is done, the bank, based on the terms and conditions they have agreed with the cooperative society, are able to take off their facility and then advance the rest, the difference, in terms of profits and returns to the cooperative society. Yes. And in instances where this model has been operated, it has actually worked and it has served as a great relief to farmer cooperative groups rather than allowing individual farmers to try to access investments from financial institutions, microfinance institutions, etc. There is always that kind of leverage, and better if farmers come together to present themselves to access some of these opportunities.
Yeah, and that's very interesting insight, Stephen. And you mentioned about governance, and I suppose, Lucy, the question I'd have for you is, and maybe you can talk to us a little bit in depth in relation to this, and that's around, I suppose, the role of governments, the role of regulation, or the lack of.
Yeah, sure. The role of government is key.
Yeah.
And then the role of the leadership structure that is put in place within the society is also crucial. First of all, for the cooperative society to be recognized, by industry and then by players within the sector. Yes. They need to, first of all, be a legal entity by registering with the appropriate body, and then having a full-fledged constitution that backs their operations and that kind of mandates the tenure of the leaders or the leadership of the society, to kind of govern the operations of the society. So with a solid governance structure in place and being overseen by the government department. For instance, in Ghana, we have the Department of Cooperatives. That is a government institution, an institution that is mandated by the government of Ghana to oversee the registration and efficient functioning of cooperative societies in Ghana. So with that supervision, coupled with very good governance structure in place, cooperative societies, tend to grow and tend to become more efficient, and they're able to attract some of these benefits or some of the things that they would need to become more efficient in their operations.
Thanks, Stephen. I just want to actually just to direct this question to Lucy.
Sure.
So Lucy, just in terms of and Stephen provided some additional insight there, but just to get your perspective on government regulation or the lack of it, as I said, and perhaps the number of unregistered cooperatives. I mean, can governments do more? Should they be doing more? And what do they need to do?
Yes, indeed. Governments can do more, and there's a lot to be done. Implementing the right corporate governance policies and structures is one thing, and the ideal situation is another thing. On the ground, the resources on the regulator side to ensure that proper corporate governance policies and strategies are implemented within the cooperatives is key. And it's an issue of resourcing the regulators enough to ensure this. On the side of the cooperatives themselves, building capacity of the members of the cooperatives so that, for example, the board has subcommittees, it has an audit committee, it has a technical and production committee, it has a marketing committee to see to the proper implementation of business management and corporate governance structures and policies is another issue. Because yes, and following from what Mr. Iwa was saying, the ideal situation is to have a group methodology lending instance whereby the group methodology benefits are used to access finance. But there is the problem of side selling from members of the cooperatives. They're supposed to give all their produce to the cooperative and pay for loans. But then we have recalcitrant ones side selling. So it is about building the capacity of each and every member of the cooperative to own the initiative enough, to be responsible enough to go by the policies, the structures, what has to be done to sustain the cooperative itself. And this requires resources. So governments can do more, and we should not put all the burden on governments. Other stakeholders can come in. And in fact, the stakeholders on the other end can backward and integrate and ensure that the cooperatives that feed them, that supply them, that's the off-takers I'm talking about, are built in such a way that this supply is sustained through proper corporate governance and business management practices within the cooperatives. So that is what I want to highlight on. The ideal situation is there, but in reality, does this happen? We have to invest in making sure that the proper thing is done in the cooperatives through proper corporate governance and business management initiatives. So that's what I have to say.
Yeah, thanks, Lucy. I think actually Lucy outlined very well there the kind of different tiers of governance, of corporate governance that are needed. And I know from many of the successful cooperatives that I've dealt with, have those governance practices and structures in place. The board members usually are supported with corporate governance, external education and support, etc. But you mentioned earlier about, ostensibly you're dealing with smallholder farmers. In many cases, they may not have that level of knowledge, they may not have that level of education, etc. So when you look at these kind of governance structures that Lucy talked about, which are right and proper and very necessary, what's the challenge from your perspective in putting those in place and operating them?
Frankly speaking, the first-hand information and the experience that I had in northern region of Ghana, I would say that NGO has actually, played a very negative role as compared to, support the cooperative. It has worked in an opposite direction. Now the farmers have a different perception altogether. They think whatever is coming to them as a support or a help, they do not have to pay back anything back. And that becomes a problem because unless and until the cooperative works on a business model, it will not be successful and it will not be a promising thing for future. The only way to move forward is to make sure that one, it should be backed by the off-taker or the industry as a whole when we are talking about the cooperative. And second, it has to run 100% on a business model. It should not be taken as a support center for the farmers. And farmers also need to understand that if they are getting something and they are able to benefit out of it, because cooperative through cooperative as a pool, they are able to get so many things. They're able to access to various services, let us say technical knowledge they are able to get, which they were lacking. They're able to get the mechanization services from one source of contact. They're able to get cheaper inputs for one thing. And the most important, they're able to get the market, which has been a problem since beginning. So if they are able to access to all these positive things from the cooperative, they also have to be responsible and then, pay back what they have got. Because at the end of the day, if the cooperatives, at the end of the day, people are running the cooperatives and they become responsible for the cooperative. And when they are putting their step forward and they are taking, let us say, loans from financial institutions, it is a liability onto their heads. Yeah. And that needs to be paid off at the end of the day. We have bitter experience actually here in Northern region, wherein we were able to access the loans with the help of Mel Consultant, where Lucy is there. They were able to access loans from one of the microfinance companies in Accra. But when we had supplied all the inputs and the support was given, the return was not been done. We were not able to retrieve the funds. So as of today, let us say the liability lies on the board members. Yeah. Similarly, Shinkafa Buni has been, approved by one of the German donors for 2.8 million euros through the Outgrow Value Chain Fund. It's a huge amount of money, but as Stephen rightly mentioned, to access this kind of fund is also a challenge. We have run pillar to post, but the bankers, they need a collateral for that kind of value. So if the cooperative will already have that kind of a financial muscle, then they will not be looking for that outside. So we could not access that kind of financial help so far.
And that's a real conundrum. I think that is at the heart of a lot of
it's a vicious circle, actually. Yes.
Yeah, with funding projects in Africa, and you mentioned the punitive interest rates earlier, and all Absolutely. Of that feeds in very negatively, doesn't it?
And the funny part is, the donors. I've been, fortunate enough to meet the donors committee myself, and I was told the fund came to Ghana at a rate of just 0.1% for the cooperatives like us to access. But by the time the cooperative is able to access, they are paying almost about 14 to 16%. You can see the difference from 0.1 to 14 to 16%. Quite a huge gap. And that itself, becomes a burden onto the cooperative as well as onwards to the farmers as well.
Just to turn maybe, and before I go to the others, just want to have you there in terms of the practical dilemma and the whole kind of, I suppose, nemesis of co-ops is the side selling. Lucy mentioned side selling, and this is a perennial challenge for all cooperatives. And again, I think the more developed ones, they've been able to address this, but the vagaries of commodities and farmers is supply, demand, and prices, and they'll always be a certainty in terms of the fact they will change. So how do you address that in a practical way? What's your solution in a practical way?
See, as I mentioned earlier, the only solution is that the industry has to back the cooperatives.
Yes.
The off-takers have to also shoulder that burden, because at the end of the day, they are the one who's going to benefit out of the raw material that they're going to have, and they'll be able to run their mills at the optimum levels. So they also have to take part into that. And I would say that government as government needs to focus mainly on infrastructure rather than getting into smaller issues like supplying them seeds or subsidized fertilizer. That is, a farmer will be able to cope up with that. But major investments in capital like, building dams, irrigation, access roads, that is something which cannot be done by a business sector. It has to be taken over by the government sector.
Yeah. Okay. Thanks, actually. Stephen, maybe over to you, and perhaps you might just talk to us about, from your own experience, in terms of the role of technology and how it can influence and enable more streamlined governance and operations of cooperatives. And I suppose I'm thinking of things like finance is one of those things. Microfinance has been mentioned earlier. From your experience, what's the relevance of technology, and do you think as we kind of move in a world where technology is evolving at such a rapid pace, not least mobile apps, etc., what role do you think they will have on the co-ops of the future?
Technology is a key element in the entire outplay, of the efficiency and growth of cooperatives in Africa. In Ghana, we have some technology firms, Isoko, for instance, Agro Center. These firms have platforms where farmers who could be part of a cooperative society would be signed up, and the arrangement possibly made with a financial institution, be it Universal Commercial Bank or a microfinance institution or savings and loans or credit union, and there is that kind of interface, exchange of information, especially if the farmer is screened and assessed, and the farmer qualifies to access a facility from the financial institution. The loan is put on the platform where the farmer, let me say, can actually see, but cannot, may not be able to touch the money. Yeah. Then based on the arrangement the cooperative would do, possibly with input service provider or input supplier or land preparation service provider, the app is able to, negotiate, kind of transact business, with the service providers in such a way that all the farmer would have to see is that, oh, I'm buying five bags of fertilizers. I have ordered a tractor to plow my 3 acres of land, and that is going to cost X amount of Ghana cedis. And that will be taken out from the wallet, the loan on the farmer's wallet on the mobile app. Yes. So at the end of the day, issues of misapplication of funds, and then misuse of funds for unintended purpose by the farmers are highly minimized through the use of such mobile applications. And it's been very effective and proven over the years. And this is where we feel that a lot more cooperative societies should be able to sign up to some of these platforms to enhance their efficiency, and then also give some comfort to the financial institutions that, yes, when funds are lent to the farmers, they're not going to just dip their hands into the funds and then misapply it. But because of the use of ICT platforms, the funds will be well regulated, and would be the chances of it being used for the intended purpose is maximized to the benefit of both sides. Yes. Yeah. No. Thanks, Stephen. That seems to make sense, and I think it is, as I said, an evolving area, and one that will have particular application to Africa and the co-op model. Lucy, maybe back to you, and I'm going to go back and maybe put to you this resources, and it hasn't gone away, and it won't go away, and until it's properly addressed. And it was interesting what Akshay said about, he had successfully drawn funds coming in at a heavy discount. I think he said 0.1%, which is low on any global benchmark. And yet again, it manifests itself into on the ground, it was arriving at 14-15%, which, if we just simply, reflect on that means that the operation has to have at least 20% plus return, or an operating income, I should say, to actually just stand still and to be able to fund itself. So that's a big ask for agriculture in any part of the world. And I think it really tells us the funding model as it stands is not sustainable. Probably one of the key reasons why we have such a large cohort of smallholder farmers and a highly underdeveloped agro ecosystem, value chain system in Africa.
And while we all believe the co-ops have a role to play, and I still think they do, I'd just like to get your insight and experience in this area in terms of the value chain and the challenges that lie around this funding piece, this very important funding piece. And perhaps have you come across where it's been successfully addressed to all stakeholders' requirements?
Thank you very much. I think one major progress or a progressive initiative that cooperatives have found themselves in is evolving into financial institutions. This is very typical in East Africa. If the cooperative organization is able to evolve into a financial institution, a non-bank, I think it goes a step further in bringing access to finance and closer to the smallholder farmer. And this is very prominent in East Africa, as I said already, and can be replicated elsewhere. Another thing I want to speak about is agricultural insurance. We have big players like Allianz Ghana having agricultural insurance. And if this is used as a means of guaranteeing the production sector, this will help a lot. So that, for example, the farmer has agric insurance and has insured the production activities of the crop cycle. This will give the financial institution more confidence in lending to this smallholder farmer, and particularly through a cooperative. So a cooperative with an insurance company like Allianz Ghana behind it, or any other insurance company behind it, will give more credibility and more credence and more confidence in lending to these farmers. And this is a step in the right direction. Another thing is capacity building of the cooperatives themselves, helping them improve their financial management practices and improve their skills, their soft skills and skills that will help them own the decision-making process. So that I, as Mr. Musa, I know that the cooperative has gone in for a loan on my behalf, and I'm enjoying all these benefits from the cooperative. You should be empowered enough not to misuse these benefits, and to know that if I pay back and I do not side sell and I become a responsible cooperative member, this sustains my livelihood, and this creates more opportunities for people like me and helps my community. So capacity building is one. Another thing is using other methods such as agric insurance. Another thing is integrating into a cooperative a bank that will help the smallholder farmer. All these things are measures that can help the financial inclusion and help access to finance on a certain scale in Africa.
Thank you, Lucy. Actually, do you want to comment on some of those areas that Lucy's raised in relation to particularly capacity building and the relevance of it and the supports that are already there or not there, insurance, and then structuring the entity as in a sense a bank, which leaves it much more fundable? What's your own comments on observations and experience on that?
I would definitely agree with Lucy's comments on converting the cooperatives into a banking institute as well, because I have seen the successful models running right now as well in India. In different states of India, we have different cooperatives who are able to lend, because one thing we need to also understand is, when we're talking about cooperatives, let us not talk about very large cooperatives and covering a large area, because then we'll not be able to, one, control each and every farmer, and to monitor also it's an additional cost. And many a times on records, it may look very fancy and very nice, but on the ground, when you go, it'll be a totally different picture altogether. So we should talk about smaller cooperatives. And I would also say, instead of the experience that I had, instead of having outgrower model formula, I would prefer more on in-grower schemes, wherein you have a better control, you have lesser operational cost, and you have control over the product as well. You are able to provide them a developed land. Let us say 1,000 acre of land is there. You are able to provide 200 farmers on that 1,000 acres, 5 acres each. You are not spreading yourself too thin. You know there is one location that you need to monitor. The application of the fertilizer, the application of the chemicals, everything can be monitored well, and then the results can also be measured properly. Whereas when we talk about, outgrow models, or in different regions you need to run around, you may find integrity is one of the most important thing, because when we are talking about, let us say, the field force going out, you will find some sort of relations from somewhere coming in, and then as a cooperative, people sitting at the position, a decision-making position, will not be able to see the exact thing what is happening on the ground. So that is what we have also experienced.
Thank you, Axel. Stephen, maybe back over to you. And you have quite a lot of experience and insight into, as you mentioned, the cocoa sector is the largest single sector in Ghana, being the second largest producer in the world after Cote d'Ivoire. Tell us a bit about the kind of learnings and experiences of that sector. And I know it's as you said earlier, it's well funded, it's strategically very important to the government in Ghana. But what learnings are there that perhaps could be transferred to other co-ops in the region and across Africa?
The cocoa sector in Ghana, as Raleigh said, is very key to the government of Ghana, and the sector is well regulated. In addition to that, the cooperative societies of farmers and within that particular value chain are well structured and solid, especially those that are registered and functioning at the moment. From studies and engagements, you could see that what has helped them to function very well is the fact that they are very cohesive. The members within the cooperatives are very cohesive. They trust leadership to negotiate on their behalf with service providers, with the government when it comes to agreement on prices of the cocoa sales for a particular year. They trust their leadership, and the leadership are able to source for funding, for their operations. And in many instances, the agro inputs that come to them, come through the government arranged models, yes. And then there is this kind of arrangement where every cocoa farmer, excuse me to say, whether you like it or not, would have to sell your cocoa beans to the government. You understand? So it's a well-regulated environment. And the model is working simply because the farmers will naturally sell the cocoa to the government. And the government is also very comfortable that, yes, if I pick a loan from X bank to procure inputs for the farmers, yes, surely the farmers will supply their produce to me, so I'll be able to get the money back and be able to help them to defray the cost of the inputs. And that model is working very well. So when you migrate that model to other sectors, like for instance, rice farmers, cooperative society, like soybean farmers, cooperative society, the model is supposed to work in similar value in other value chains, but then it doesn't work that way.
Yeah. And
one of the key causes or reasons why the model doesn't work that way is the issue of side selling that Lucy mentioned. You understand? So a financial institution would put money into the operations of the credit of the cooperative union, for instance, and at the end of the day, the leadership of the cooperative union would agree with off-takers, to offtake the produce at an agreed price.
Yeah.
But in many instances, you find a good number of the farmers getting into side selling their produce to people who are outside, the arrangement that they have. And this always brings issues of mistrust and, inability of farmers to repay their loans that was advanced to them through input service providers. and other service providers. So at the end of the day, if a bank invests money into your business and you fail to repay the facility, there's no way you can walk back to the bank and then tell the bank to give you money for the subsequent farming years. And this has been the cycle within the other value chains apart from cocoa, and it's actually a big challenge. And I feel that we need to have a stakeholders engagement to discuss in depth, to find ways and means to mitigate these obstacles and challenges, so we can have the other cooperative societies functioning just like those who are working within the cocoa sector in Ghana.
Yeah, thanks, Stephen. It is a vicious cycle, as we said earlier. So I think that's. I just want to thank you all. We're kind of moving towards the end of our session. It's been extremely insightful. And before I wrap up, we have time just for one question. I see here maybe Akshay, as somebody who's kind of worked in various parts of the world and has experiences and insights into many different markets, kind of maybe outline to us where co-ops have, from your experience, have worked really well. And again, what we could potentially learn from those experiences and those co-ops, and how they could be applied into Africa.
Certainly, I would like to definitely highlight over here the successful association that I've come across, which is the Rice Grower Association in RGA in Australia. And RGA plays a very strong role in the rice sector in Australia. They have their own processing units, not only in Australia, but as well as in the US as well. They have their own brand called Sun White. They have their own basmati rice brand. They are doing very well. This is the business side of the aspect. Apart from that, the most critical thing that they have been doing is, because of the support of the industry, every year they are able to do the research and development on a better seed, which is able to give better yields to the farmer. They're able to do a training centers which will train, let us say, operators for tractors, for the combine harvester, for the agricultural equipment which are lacking in Africa. So cooperatives is not just only going to help the farmers, but it is going to help various factors involved into the industry and in the segment. For instance, let us say, if cocoa industry, let us talk about cocoa industry. Stephen has been talking about the cooperative has been doing very well. Yes, because of the size of the sector. And it's a dollar earner for Ghana. And it has been regulated, so there is no way of side selling in cocoa. But one of the major issue which is going to be or can be foreseen in cocoa industry is that the farmers are getting older and the young generation is not getting into cocoa farming. So very soon we will be seeing that we a decline into the farming, unless and until there is an intervention and the young generation also takes part into it. Similarly, cooperatives are supposed to identify the problems which are supposed to come, or they're able to identify and start taking steps towards resolving them, bringing it forward into the industry, and then discussing about it and getting the solution on the board.
Thanks, Akshay. Does anyone else want to add to what Akshay has said before we wrap things up? Okay, then. Look, thank you again, Akshay, Lucy, and Stephen. It's been, I think, a very useful and informative discussion. I suppose to wrap up, I mean, resources are the big challenge. Really, access to finance once again is a big problem. If you don't have that, you don't have the driver and the generator of the oxygen, if you like, for the structure and the benefits that can accrue from the cooperative model. I think capacity building has been mentioned as well, and training of the actual participants in management and in the governance roles of cooperatives is particularly important. And overall better governance, that's something that's really needed as well. I think government support by way of regulation and importing, and I should say applying that regulation, is also important. We can see the benefits Stephen mentioned of the cocoa sector as an example in Ghana. And also the fact that these poor structures or poor governance structures then sets a culture of side selling in many cases. It also means that the whole cooperative model as what it should do and what it's about is very much compromised. Axel mentioned about what was happening in Australia, and when co-ops work well, they also then can generate surplus income for research, and that research then can bring greater technology, it can bring greater inputs, improve efficiency, production, yields, etc. All things that are very badly needed in Africa. And also then it brings more empowerment, and Lucy mentioned that as well ultimately, and as somebody who works very actively in that area. And empowerment is very important for smallholder farmers, because if they can work in aggregate, they can also then leverage their power within the value chain, which is increasingly important. Also, things like insurance was mentioned by Lucy as being particularly important as well, and supporting a banking system, if you like, within the co-op, which helps then to attract funding from various banks and multilateral agencies. I suppose to kind of wrap up, we all know that up to $60–70 billion a year is spent by Africa importing food. By 2025, this is due to increase to 120 billion. I think that could be largely saved and spent by governments on much more important things, where food, the vast majority of that food and agriculture can be produced on the continent itself. And I think co-ops have a real central role to play in relation to that. But unfortunately, we haven't seen the success or the potential of co-ops on the continent as yet. But we hope that changes. And I think today our discussion has touched on many reasons why and where possibly that can be addressed to the betterment of the co-ops themselves, and not least of the smallholder farmers who participate and should benefit from these particular models of ownership. So thanks again to everyone, and thanks again to everyone that's joined us today and looks at this webinar on demand also. Thank you and have a good day.
Thank you so much.
Thank you. Thank you very much. Bye-bye.